Assalamualaikum warahmatullahi wabarakatuh. Good afternoon, everyone. This is a general lecture event with our speaker, Professor Dr. Munder Y.S. Eldaia. Before this, if everyone is ready to start, I will open this session. Before we start, I would like to remind you to open your camera and mute your audio. Also, I would like to inform you that you should rename your name to your full name since it will be used in the certificate. The Honorable Professor Dr. Munder Y.S. Eldaia as the speaker for today's event. The Honorable Mr. Bahrul Ilmi SE, ME, SY, PhD as a moderator for today's event. And the Honorable Ms. Fitri Wahyuni SE, MSc as Head of International Program of Accounting. And the Honorable accounting lecturers and the participants who attend today's general lecture. Alhamdulillahirabbil alamin wassalatu wassalamu ala asyrafil anbiya'i wal mursalin wa ala alihi washabihi ajmain amma ba'du. Praise the presence of God Almighty who still give his guidance and mercy to all of us so that we can attend this general lecture in good health. Blessings and greetings, let us always devote to our Lord, the Prophet Muhammad, who had brought us from the time of Jahiliyah, heading into the era that is full of inayah. The topic of today's general lecture is accounting in action using the account equation and financial statement, which will be delivered by our special speaker, Professor Dr. Munder Y.S. Eldaia, and will be guided by Mr. Bahrul Ilmi as the moderator. Let me introduce myself. My name is Zaima Tunisa. As the master of ceremony, here I would like to show you the agendas we arranged today. The first agenda is opening. The second agenda is general lecture session. The next agenda is Q&A session. And the next agenda is photo session. And for the last agenda is closing. Let us start the first agenda that is opening by reciting Basmalah together. Bismillahirrahmanirrahim. The next agenda is general lecture session with the topic accounting in action using the account equation and financial statement. This event will be guided by our moderator, Mr. Bahrul Ilmi. He is an accounting lecturer from Universitas Muhammadiyah, Yogyakarta. For Mr. Bahrul, time is yours.
Okay, thank you, Sister. So, can you hear my voice?
Yes.
Can you hear my voice, Sister?
Yes, sir.
Okay, I just want to make sure that my voice is on already. Okay, thank you for the ceremony. Okay, sorry, that's a little bit tough. Okay, because that is starting. So, good morning, I think, Dr. Munder Eldaia. Okay, no, in Palestine it's morning, right?
Yeah.
Okay. Bismillah. Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Okay, Alhamdulillah, today, praise to Allah subhanahu wa ta'ala. Today we have a good time to discuss together with Dr. Munder Eldaia. Sorry for maybe fault my spelling, your name, Munder Eldaia. So the doctor, actually, if I read the curriculum vitae from the Dr. Eldaia, so doctor is really expert, a lot of experience regarding the Islamic finance, and also the topic. If I look at from the qualification, also Dr. Munder PhD degree from Museum, Department Accounting and Finance, expert in Islamic finance and takaful, and he did a master degree specialization accounting and finance from the Islam University. This is very good. And a bachelor degree in specialization accounting from Achman University Network Excellent. So also, Dr. Munder is certified financial arbiter by the Ministry of Justice 2016. So also the some qualification and experience from the postdoctoral, also the assistant professor, and also become speakers. Yeah, speakers in some seminar or maybe the conference, and also have the reward win the postgraduate research poster competition in USIM 2018. So this is a good time for us to listen the some information or some discussion with Dr. Montir Eldaia. Okay, I think it's good enough. Also the time, and also we want to know the issue regarding accounting acquisition financial statement, and inshallah it will be delivered Dr. Montir Eldaia, and this is time for you, Dr. Montir.
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف المرسلين. Okay, first of all, I want to thank you, Dr. Bahrul Ilmi, and I want to send the thankful from Palestine to Indonesia, especially from Al-Aqsa University. Alhamdulillah, today I so happy and so proud to share this lecture with Al-Muhammadiyya University Yogyakarta. This is a good chance or opportunity for us to share our knowledge with the international students in Palestine and in Indonesia. Inshallah, today we will share together a discussion in the basic idea of accounting is regarding to accounting equation and financial statement. The screen is show my screen, share screen.
Yes, ready, Doctor.
Okay. Inshallah, today we will discuss about the account equation and financial statement. As you know, the financial statement is include income statement, balance sheet, and cash flow statement. If we start to discuss about account equation, we must know the account equation is basic idea of double entry system in accounting. The double entry system is the basic idea of accounting as all. What the meaning of a double entry system? Double entry system that explain and show us every business transaction. Every business transaction, if we buy goods, if we buy assets, if we sell goods, if we pay salary, if we make any business transaction, we must have two aspects, debit and credit side. Debit side and the credit side, that we have two sides, left side and right side. This is left side and right side must be equal. That means the accounting equation said the company's total assets must be the sum of liabilities and shareholders equation. That means also the double entry system, as we see in this slide, must be debit side and credit side. Debit side and credit side must be equal. As I mentioned, if we buy car, we must have car as an asset in the debit side and the cash in the credit side. That means we must pay cash to buy this car. That means we have cash and we have car. As we show in this slide, the basic of accounting equation, we must have two sides. In the left side, we have assets. Assets, we will explain what is the meaning of the assets, must be equal liabilities and owner equity. If we start any business, we must have the assets. The assets mean the owners or the resources of our business, like building, land, furniture, computers, every items in our business. That means we have assets. From where we get these assets, we have two ways or two options or two choice to get this assets. We must even borrow the money to buy these assets, or the owners of this business pay from his money to buy this assets. Finally, we summarize the equation of accounting. If in the real life, if we start business, we must have our own business. That means assets, as I mentioned. We must need building or computers, furniture, also we must have inventories, goods like this. That means this is our assets, this is our resources. These resources or assets, how we get these assets or resources? From two ways. Even the owners of the business pay from his own cash or from his own money. That means owner's equity. Or another way, we can go to bank and borrow money from the bank. That means liabilities. That means we have obligation to pay in the future. This is the basic equation in accounting. In any business we can restart. The double entry system, as we see now, this is two sides, debit side and the credit side. Like this, if we buy machine by 3,000 US dollar, we must pay cash to buy this machine. So our debit side is the machine itself. This is the asset. The asset is increased. The asset increased. That means now we have own machine for our business. The credit side or right side, we must pay cash to buy this machine. That means our assets at the same time, the cash will be decreased. So we will record the cash in the credit side. This is a photo, or this is slides explain. We must have accounting equation. It must be equal. What we have an asset in the left side, in the other side is the liabilities and owners equity. This photo explain us both sides must be equal. Both sides must be equal. Like this, 3,000 US dollar in the debit side must equal 3,000 in the credit side. That means accounting equation must equal or same sides, left side and right side, debit side and credit side, it must be equal. The content of accounting equation, this assets, liabilities, and owners equity. We must know what is the assets, what is the liabilities, what is the owner's equity. The assets that mean the resources owned by individual or organization. Any item or any resources we own as individual or organization. What mean the owned? Owned, that means we can use, we can buy, we can control. That's the meaning of owned. Owned, that means we as an organization or individual, we can buy or we can control, we can use. Like example, if we have car is the asset. This car we can use in manufacturing. This car, we can buy this car and have money. That means any resources in our business, we can use, we can buy, we can control everything. We have all authority in these resources. That means assets. The assets include like this, cash or equipment, property, anything that help the company and generate revenue. That means assets. I hope the asset is clear. The liabilities in the other side, liabilities, we mean the debit or other obligation owed by one party for another party. The liabilities, that mean the obligations must be paid in the future for the labor or for the another party, our organization. If we go to the bank and borrow money, that means this money is obligation for us to pay in the future. We must pay this money for the to the bank in the future. That means this money we borrow from the bank. The bank must be asked us to pay this money and interest in the future. The liabilities, that mean obligation owed by one party to another party. Like also if we issue the bonds, that means these bonds, we must pay for the owners of these bonds this money and interest in the future. Also accounts payable. Accounts payable, when we buy any foods or goods or assets from the other parties on the account. That means we will pay this money in the future. This is the liabilities. As I mentioned before, if we start our business, we can borrow loan from the banks. That means liabilities. Last items is owner's equity. Owner's equity, that means owner's equity, the value of investment made by the owners of the organization. If we start the business, the owners of this business can pay or share in this establishment of this business, this money owed by the owners of this organization. This money, we call it is owner's equity or shareholders. This is money is related to the owners of the business. What is the difference between liabilities and owner's equity? The owner's equity is related to the owners of the company or the business. The liabilities is the obligation for another party, other the owners of our business. This is the three items must be clear and must be understood very well, because this is the basic of our lecture today. This explain us what is the assets. The assets like inventory. The inventory, this is the merchandise or goods or every purchase we have in our business. Equipment like computers, furniture, every related this. Also the cash, this is our asset. The cash in our bank, this is our resources to use to generate revenue or profit. Also furniture, building, land, every resources we own in our business is the assets. Liabilities like tax dues, this is the tax we must pay for the government, or unpaid bills, or credit purchase dues, or loans borrowed from the bank. All these items is a liability. Third one, this is the owner's equity. It's accumulated profit. If we have profit during the year, we will transfer or posted this profit for the next year. This is we call is the account accumulated profit. And the last one is the capital. The capital, that means what is the owners pay for his business. At the last, we must be mentioned, or we must focus about the accounting equation. That means what we own the asset, what we have the assets must be generated from either liabilities, borrow, obligation from other party, or from the owners of the equity. That means the business at the end must keep the balance or the equality of assets, equal liabilities, and owners equity. Also, if we start our business, we have three items like this: assets, liabilities, and owner's equity. The assets in the normal, or when we increase the asset, we must be record the assets in the debit side. We must record the assets in the debit side. If the assets decrease, like the example mentioned before, if we buy merchandise, the cash of our assets is decreased because we buy the merchandise. So at the same, the merchandise will increase. We will write in debit side, and the cash at the same transaction we will be recorded in the credit side.
Dr. Mamcher,
Yeah.
sorry for interrupting. So are you moving the slide or not? Because your slide is, because your slide, not moving. It's just not moving. It's just like in the first slide, but it's showing all, but not moving at all. I mean, okay.
Wait. Okay. Let me stop the sharing.
Okay.
Oh, no slides is see.
Oh, just now we saw that your slide, but no moving. Okay, maybe you can try to okay, now you're moving. Because now it's stop.
Now moving.
No moving already.
Now.
Yeah, okay.
Moving or no?
No, moving already. Good.
Now it's moving now?
It's moving, yes. Okay. Okay, thank you, doctor.
Okay. Now moving or no? Doctor?
Okay. Okay, try to move, doctor. You move already?
I moved. I already moved. Now?
No. But now in the screen, we saw that the slide, but not moving again.
Okay, wait. Okay. Now moving, doctor?
Oh, no, already.
Okay. Okay.
Thank you.
Okay. We will again. Okay. As we see in this slides, the assets, liabilities, and owner equity, we have two sides, debit side and the credit side. The assets normal is debit. When it increase, we will record this is in the debit side. When the asset is decreased, we will be recorded in credit side. Liabilities is the opposite. When the liabilities is increased, we write it in the credit side. When liabilities is decreased, we record it in the debit side. Also the same equity. When the equity is increased, we will record it in the credit side. But when the equity is decreased, we want record it in the credit side. We will give example, a practical example in the next slide, inshallah. Okay. We will give an example for the accounting equation now. When Mr. Muhammad Noor started the business with cash 500 and land and building, and also in 500 US dollar. This business start from his own money, 300,000, and borrow from the bank 700,000. How we will implement in this transaction in the account equation? As we see now, in the asset and in the left side and or in the debit side, we will record cash building, land and building is 500 from cash and 500 from borrow from the money from the bank. So this is the total debit side is 1 million. In the credit side, or in the right side, on the liabilities and owners equity side, this is we record loan 700 and capital 300. That means in our business, we have two sides for accounting equation. In the asset, 1 million, in the liabilities and owner equity, 1 million also. If we mention, or if we notice that the two sides of account equation must be equal. Two sides must be equal. Our assets, our own, must be our obligation or liabilities and owners equity. That means what we have assets from liabilities and owners equity. Okay, let's see the asset section. The asset section in the accounting is include two types or two sections from assets: current asset and non-current asset or long-term asset. The current assets that include any asset on the balance sheet for 1 year or less. Any asset is stay in the balance sheet for 1 year or less. That means the liquidity of these assets is so high liquidity. So high liquidity, that means we can transfer these assets to cash or equivalent cash. What we include in the current assets, the first one, most liquidity is the cash. Cash is most liquidity, can be used directly. Account receivable, that means we sell the foods on account. That means we sell the food for the customers and we not receive the cash at the moment. That means we will receive the cash in the future. These items we call it account receivable. Also inventories that the goods or the items or the sale is ready for sales. Inventories, that means the goods we sell or the services we can buy. Prepared expenses also the least liquid. What mean the prepared expenses? That mean we pay for expenses but not we use its expenses. Like if we maybe pay for electricity or pay for salaries in advance. Any expenses we paid in advance. That means like this, maybe we can rent building. We can rent building. We pay the rent fees at the first or at the start or the beginning of the year. Maybe we can pay expenses or rent expenses for 2 or 3 years. That means we pay expenses in advance. This is the current assets. Or another time is we call short-term assets. Non-current assets or long-term assets, that mean the items of our assets stay in the balance sheet for few years. Like land, equipment, furniture, land. All these assets, we call it non-current assets. That means these items will be stay in our balance sheet for more than 1 year. That means equipment or land. This is land we will be appear or stay in the balance sheet for maybe for long time, 5, 10, 20 years. Also furniture or equipment. All these items we use in our business for long time, more than 1 year. This is the difference between current assets and non-current assets. Next is the liabilities. Also liabilities, we have current liabilities and non-current liabilities. Non-current liabilities, these liabilities or obligation must be paid during the year. This is obligation must be paid during the year. Like accounts payable. Accounts payable, this is the purchase of goods or assets on account. Purchase on account. That means we purchase or buy food or goods or furniture. We will pay for this in the future, not at the moment of buying. Also, the accrued expenses. Accrued expenses like payroll or tax. The accrued expenses, this is expenses used during the year, but we not pay yet. We not pay it. Like tax, we can pay the tax in the next year or the last month of the year, maybe in December, we pay the salary in the January. Like this, for this accrued expenses that must be pay these expenses. Non-current liabilities, these liabilities or obligation may be paid for 2 or 3 years, like long-term debit. Maybe if we get the loan from the bank, we can pay this loan for 3 or 5 or 10 years. That means non-current liabilities we will pay in the future. Last items is the equity. Equity, as we mentioned, this is the obligation or for the owners of the business, for owners or of the business, like owners' equity, retained earnings profit. If we have profit in the this year, we will transfer or posting this earnings or profit for the owners as a capital, or the stocks or shares issued by the organization. This is the shareholders, also equity or capital for the owners of the this business. These slides also show us how is this also account equation may be transfer, or how it's another view of our account equation. The assets is the same, liabilities is the same in every state. But the equity, as we mentioned in the previous slides, the equity may be include the capital plus retained earnings. Retained earnings, this is the profit transfer from the income statement to balance sheet. So the revenue minus expenses minus dividends is retained earnings, also transferred to our balance sheet. Okay. Now we will see our audience. This is example to explain how is the account equation is work, and how is the double entry system is work. First, as we mentioned, Mr. Muhammad Noor started his own business in cash, land, and building. 1 million from, we get this 1 million from loan from the bank and capital from the owners of this business, from Muhammad Noor. During the year, Mr. Muhammad Noor issued share for 10,000 cash. That means we issue the share. Share is owner's equity from the shareholders of our business. This transaction have two sides. The debit side is cash. That means we get or we receive cash from the shareholders. The cash increase plus, and at the same time, shareholders also increase. We have new shareholders in our business. Number 3, if we buy car for 20,000 US dollar, our business want to buy car. Our business want to buy car from the market. This is 20,000 US dollar. And also this transaction have two sides in the asset. At the same time, our assets or fixed assets or non-current assets is car increase by 20,000 US dollar. At the same time, the cash is decreased. We pay cash. We pay cash. So our cash will decrease $2,000. So the account equation is still balanced. Account equation is still balanced because we, at the same sides and asset, we increase the car and decrease the cash. So still we have balanced our accounting equation. Okay, next. We buy inventory on account. We buy goods or inventory on account by $5,000. Sorry? Okay. When buying inventory on account by $5,000, that means our inventory is increased. That means we have inventory increase is the assets. Our assets increase, inventory $5,000. And the liabilities, also liability increase $5,000 because we not pay cash. So we have accounts payable $5,000. Also, we still remaining that our account equation is balanced, is equal. Two sides is equal. Okay. Next, we will pay part of loan. We will pay part of loan $100. So our cash will decrease. Our cash will decrease. So our assets will decrease. In the right side or credit side, also the loan is decreased. Sorry, the loan is decreased. We before we have 7,000. Now our loan is decreased at the same amount. 100, also 100. So still our accounting equation must be equal. Decrease and decrease. If we see there increase and decrease in the same size. So here decrease, decrease. Here increase, increase at the same as different size. Okay, next. The sales inventory $2,000. If we sales from our inventories, the inventories is decreased because our goods is decreased, our assets increase. Okay. Also accounts payable also decrease. Sorry, accounts payable also decrease. Okay. Last one is owner withdraw the cash. The owner withdraw the cash by $50,000. The owners of our business is withdraw or take some of his capital. So the cash is decreased, also capital is decreased. At the end, our accounting equation or still balanced. Accounting equation is still balanced. This is 863,000, 603,000, 260,000. If we see in this slides, we make 7 transactions, but at the end, our accounting equation is still balanced. This must be in our accounting equation must be equal in the every situation. Also, okay. Next, we will start the financial statement. The financial statement, this is the main reports that any investors or the owners of the business must know how this is the income statements or balance sheet or cash flow. What is the include in this balance sheet, this financial statement, and what is the result of this financial statement? We will explain every one. Okay. First statement is the income statement. The income statement is a very important statement because any investor or analyst must be looked for income statement. Why? Because this financial statement is explain or show us the result of our business. So the income statement shows the revenue and cost for a period and whether the company runs at profit or the loss. This is the result of our operation, the result of our business. What is our result? Is profit or loss? Another called or name of the income statements is profit or loss statement. Profit or loss statement. This statement includes two items: revenues and cost or expenses in our business. Revenue minus cost and the expenses that give us the result of our business, a profit or loss. If our revenue over than or bigger than or more than our cost and expenses, the result is profit. If the revenue is less than our cost, the result is loss. The result is loss. So the income statement, again, the income statement show us the result of our operations, the result of our business is profit or loss. This is the result, profit or loss. How would we get profit or loss? Our revenues, our sales during the year, if we minus our cost or expenses, the result will be profit or loss. Profit get when if our revenue more than our cost, the result is profit. If the revenue is less than our cost or expenses, the result is loss. Okay, let's see. This is the example of our income statement. This is the example of our income statement. Income statement include revenues. Revenues is include repair service or revenue, interest revenue, or our sales. Our sales. What is our sales or revenue in this company? We will get the total revenues. The total revenues. We will minus expenses. Expenses like salaries and wages. Expenses. What we pay for our staff. Rent expenses. Rent expenses. Depreciation office equipment. Depreciation computer equipment. Insurance expenses. Interest expenses. This is our all expenses. Our all expenses. We will get the profit before tax. Profit before tax when we total revenue minus total expenses is the result of profit before tax. Otherwise, if the total revenue is less than our expenses, we will get loss before tax. Loss before tax. Okay. After that, we will minus also income tax expenses. Income tax expenses. The result, the final result of our income statement is profit after tax or net profit. Net profit. This is the example of our income statement that include revenues, total revenues minus expenses. Expenses include all expenses in our business. Okay, after that, we will also minus our tax. We will get net expenses. Also, we have one note more. There is two types of companies. First type of companies like this, services companies. This is service companies. Another type is trading companies. Trading companies, that means we have buy goods. We buy goods. This is maybe we will see some difference in the income statement. Okay. The next financial statement is the balance sheet. The balance sheet is same accounting equation because the balance sheet let us know the position of our company or our business. That the balance sheet display the company's assets, liabilities, and owners' equities at a point in time. In any time during the year, we can know what is our total assets and what is the liabilities and owners' equity. That means we can know our position in any time in the year. So the two sides of balance sheet, must be equal, as we mentioned before. The final of our balance sheet, as we see in the next slide, the total equity, the total assets must be total liabilities and owners equity. One more note here: the net income from the income statement here, this profit or net income must be used in the liabilities, or we must be used in the balance sheet. That means our net income will be posting or transferred to the total equity in retained earnings here in retained earnings. So net income from the income statement flows into the balance sheet as a change in retained earnings, adjusting after payment and dividends. So this is the contents of our balance sheet: total assets, current assets and current liabilities. In the right side or credit side, total liabilities, current liabilities, non-current liabilities, total equities, capital, and retained earnings. Okay, this is the example of balance sheet. The example of balance sheet, we have two sides. This is side is assets. Another side is liabilities and owners equity. Okay, we can see here the current asset. In the asset, we divided the assets section is two sections: current assets and property and equipment, or non-current assets. In the current asset, we can see cash and cash equivalent, account receivable, inventories, prepared expenses, and investments. This is the current assets. As we see, total current assets 149. Okay. The property and equipment or non-current assets like land, buildings, and empowerment equipment, less accumulated depreciation. Also, other assets, intangible assets, less accumulated amortization. The total of this size, total assets, 472 US dollar. Okay. At the right side, or as a credit side, or as liabilities and owner equity side, we have also current liabilities, accounts payable, notes payable, accrued expenses, deferred revenues. This is the total current assets. Also long-term liabilities. Okay, total liabilities is 247,000. Shareholders and equity or owners equity include common stock, additional paid capital, retained earnings, and treasury stocks. So we must see these numbers. Two numbers must be equal. That means total assets must be equal total liabilities and owners equity. This is in the balance sheet. So in the balance sheet, we not see net profit or loss. Just we see the position of our organization, the position of our business. We see how is used, or how much we have on assets and how much we have obligation for other parties or obligation for the owners of our company. This is the example of balance sheet. Okay. Cash flow statement. Cash flow statement have another objectives of have another aim. What is the objectives of aim if the purpose of cash flow statements is to look at the cash inflows and outflows, or another terms that mean how the movement of our cash, from where we generate the cash and how use this cash. This is very important. How is the liquidity of our business? That means the purpose of a cash flow statement is to look the cash inflow and outflows for certain time frame with no generate to profit generated. Okay, we not focus here in our cash flow statement for profit or loss. Just we see how is the movement of our cash. We have three main types of activities. The first activities is operating activities. operating activities that will focus for current assets and current liabilities. Investing activities with the focus for non-current assets, and the final activities is for financing activities. This is focus for owners equity, and long-term owners equity. Okay, this slide will see us how for cash flows and cash outflows. This is cash inflows, and this is side is cash outflows. Now, if cash flows is increased plus the assets will decrease, or another option, if assets is decreased, the cash will increase or cash inflow will increase. Again, if our asset is decreased, that means our cash flow is increased. Like if we sell the inventories, the inventories asset will decrease. At the same time, we will get cash. So our cash will what? Will increase. Our cash will increase. Other side. Okay. If the asset will increase, the cash flow will decrease, will decrease. How? If we buy goods, the cash will decrease. Also, the goods will increase. That means we will focus on cash. If we buy goods, the cash will decrease and the asset or inventory will increase. Okay. Third choice, the liabilities. If liabilities increase, the cash will decrease. How? If we pay for accounts payable, cash for accounts payable, the liabilities will increase. Or sorry, if we take loan from the bank, the liabilities will increase. Also, the cash will increase. Okay. Last choice or last option, if liabilities decrease, that means our liabilities will decrease. Like if we pay for accounts payable, the accounts payable itself will decrease. Also, the cash will decrease because we pay cash for accounts payable. Okay, this is the all choices for cash flow statement. Okay. Now we will mention for operating activities that related to the current assets and liabilities. That means if we receive from sales of goods and services, if we receive cash from sales of goods and liabilities, our cash will increase. Okay, interest payment. If we pay for interest, cash for interest, our cash will decrease. Also, income statement payable. If we pay for income tax, our cash will decrease. Also, payment made for suppliers of goods and services, salaries and wages for employment, rent payment, any other type of operation. So our focus here for current assets and current liabilities, any current asset or current liabilities payment for cash, we will mention in the operating activity. Okay. For investment activities, we will focus on the non-current assets. That fixed assets like building and vehicles or land, property, plant, or equipment. So during the year, if we buy land or sell land, if we buy equipment or payment for equipment, for vehicles, for cars, this will mention or count it in the investing activities for non-current assets. Financing activities for non-current liabilities and owner equities that related for financing activities. Financing activities, if include transaction involved for debit, equity, and dividends, loans, all transaction related to debit or equity and dividends or loans that will mention in the financing activities, that mention on the financing activities. That means if we pay dividends for owner's equity, we will mention in the financial on the cash flow statement. If we take loan, long-term loan, we will mention in the financing activities. If we increase the capital, we'll mention for financing activities. Okay. This is the example of cash flow statement. Cash flow statement. So our cash flow statement, we will start with cash at the beginning of the year. What is the cash we have in bank or in the our business? We will mention the cash at the beginning of the year. We will mention at the cash beginning of the year. Okay. Operation activities like customer cash receipt from customer, cash receipt from customer. So we must make add for this amount. We add this amount. That means our cash increase. Our cash increase. Okay. Cash paid for inventory purchase. We must pay minus or we will decrease or take minus from this our cash. General operating and administrative expenses. This is cash pay. That when pay cash, that means our cash will decrease. Our cash will decrease. Also wages expenses. Also our cash will decrease. Interest, income tax. All these items must be related to the current assets or current liabilities. Current assets or current liabilities. When we receive cash, we will add this amount. If we paid cash, we must minus or surplus this cash from our cash statement. That means this item or this section will explain us how is the cash increase or cash decrease in the current assets and current liabilities. Okay, this is the first section. So net cash flows from operation. How we get this amount? Net cash from operation. We will minus the cash paid from the cash receipt. So 693,200 will minus this amount of cash paid. So the net cash from operation, this amount 147,900. Okay, next, the investing activities. Cash received from sales, property, and equipment. So this is the non-current asset. Non-current assets, so sales, property, and equipment. Okay, so collection of principal on loan and sales of investment securities. Also this. So if we sell property, we will receive cash. We will receive cash. So we will add this cash. This is inflow, cash inflow. Okay. Cash paid for. If we cash paid for purchase of property and equipment or making loan to other entities, this is will decrease the cash, decrease the cash. So if we now net cash flow from investing activities, this is minus. Why? Because our collection cash is less than the payment cash. So in this example, we collect cash from sell property and equipment. Okay, but at the same time, also we making loan for other entities. So we will see this is surplus 441,000. Okay, the last section is financing activities. Financing activities is related to the long term and owner's equity. If we issue stock or borrow, also if we cash paid for repayment of loan or dividends will must be minus here. We must be minus because this is paid cash. So as we see in the red color, that means it's minus. Red color that means is minus. Okay. Now the net cash flow from finance activities also is surplus or surplus. So here we at the final we must calculate the net cash at the end of the year, the net cash at the end of the year. How we can get this number is we cash at the beginning plus net cash from operation minus net cash from investing minus net cash from operation. So the end of this year is 35,200,000. Okay, sorry. Okay, at the end of this cash flow statement, we can see how we use the operational activities and investment activities and financing activities. This statement can help the administrative or the management of our business. How is the reschedule or schedule the payment or receiving of our obligation or how to can investment our assets or how we can use the money of our business. Okay, this is the three statements we mentioned before. Income statement first, and after that we take the retained earnings to the balance sheet, and we can see the cash flow during the year. So we must have, this is the compulsory financial statement for any business in the world. So must prepare income statement, prepare balance sheet, and prepare cash flow. Okay, this is very important. Summarize, very important. Summarize mention. Okay. For this time of income statement, when we can prepare for the financial statement for income statement, the time of preparing, period of time at the end of the year, we can see the result of our business. Okay, balance sheet, a point in time, in any time during the year, we can know the balance sheet. We can know assets, liabilities, and owners' equity. We can know this is the position, obviously, position of our business. Okay, cash flow, we can see it at the end of the year, the period of time for 1 year, just for 1 year. The purpose of our income statement, is profitability. We can see the profitability of our business. Okay, for balance sheet, we can see the financial position. We can see our financial position, what we own and what we own, Okay, the purpose of cash flow, is cash movement. How we can use the cash, and how we payment and how the cash movement. Okay, the measures, how we can measure this income statement. First, revenue, expenses, and profitability. The include is revenue, expenses, and profitability. The balance sheet is assets, liabilities, shareholders, and equity. Okay, the cash flow increase and decrease in cash. Just increase and decrease in cash. Start point, we can start point of the income statement by revenue. The end point by income, net income. We start revenue and end at the net income. Okay. The balance sheet, we can start with cash balance and the net of the end of retained earnings. Retained earnings. Any balance sheet must be started by cash, current assets, current liabilities, and retained earnings. Okay, the cash flow, we start from net income and the end of cash balance and end of cash balance of our cash flow statement. This is summarized. I think it summarized many things during the financial statement in our lecture. Okay. Last, I want to thank you. If you have any question, any explanation, inshallah. Thank you so much, Dr. Alamuddin.
Okay, thank you. Thanks for your explanation, Dr. Montir. Your explanation, and also it's very clear to discuss about accounting. So that's why. So we need to discuss more deeply. I think the students also have the questions. Okay. Any questions for everyone? Any question for everyone to ask and to discuss something that we know that if the accounting principle, and also talking about the cash flow, I think all the students understand, really understand. Okay, that's why, because you understand, you can ask what the question maybe you want to ask to Dr. Montero regarding his presentation. Okay, I think there is a question from the Konita, because you raised your hand. Okay. Just ask the question directly to Dr. Montero. Yeah, time is yours, Konita.
Okay, thank you so much, sir. So actually I have two questions. For the first question is, what mistakes often occur in making financial statement that should we avoid? So the second question is, what is the worst thing that can happen or can be affect if there is an error in the financial report, but we late to aware it? Thank you, sir.
Okay, so please, Dr. Montir, maybe you can directly answer the question.
Okay, in the financial statement, as we know, we are human. We can maybe make some mistakes or some errors in the preparing of financial statements. Inshallah, maybe in the next stage in deeply accounting courses, we use or explain how is the correction of errors, how is the correction of errors or mistakes, and maybe in recording or in preparing financial statements. That means we have some strategies or some methods how to make correction, how we can make correction to make some what we call recorded transaction. If maybe we record, even we need to record 10,000, we can add 10 plus. We can write it 100 even, or instead 10,000. We can record 10 or 100, either 10,000. This is the not what we call errors or mistakes in the financial statements. We have some methods or some strategies how to correction these errors, or we can make another transaction for correction, we can make opposite transaction. We reduce like this, this example, we can reduce the cash or increase the accounts payable.
Okay, so that if we do the mistake, so meaning that we will make the adjustment. Am I right, Dr. Montel?
Yeah.
Make adjustment. So adjustment in the part of the liabilities, or maybe the part of the asset, so that can make the equal or maybe the same between
Yeah.
right and left. Okay.
Yeah.
Okay. Is it answer your question, Sister Konita?
Yes, sir. Thank you.
Okay. That is the second question. Is this the first
Yeah.
question or second question? This one, this no.
So the first question.
First question is talking about what?
The first question is about the often mistaken that we
Oh,
do
mistaken.
in
Oh, okay.
doing. Yeah.
So if second, there's no to second.
The second is the worst thing that can be affect if we late to worry about
late.
our error financial statement. Yeah.
Oh, this I think is not answer yet. Just no, yeah. If we late,
Okay. If we late,
sister.
We late to aware the error of the financial statement.
Oh, okay. It's just make it late because we don't know. I think because maybe it could be because of the system or maybe the error or maybe something like very technical issues. So maybe how's the resolve the problems, Dr. Monta?
So if we have errors, it transfer for maybe 5 or 6 years like this. Maybe we make errors and transfer for the another maybe next year and third and 5 years. This is mistake. Maybe must be from the auditors of this financial statement, from the editors of the financial statement. But if we not see or not catch these errors, maybe transfer for the next or 3 or 5 years. This is must be what we call make correction of the financial statement, what we call adjustment of the financial statement in the future. But really, this error I don't face in our life for more than 5 years or 10 years like this. Must be fine because our financial statement must be, as we mentioned, balance sheet, assets equal liabilities and finance and the owner's equity like this.
Okay, thank you for your explanation, Dr. Muntar. Okay, so the next question coming from the Andin. Okay, maybe Andin, you can mention directly the question to the Dr. Muntar.
Thank you, sir. I want to ask about what is the impact if the financial statement present are not in accordance with the company's real condition? Thank you.
If the annual report is not accordance.
If the financial present are not in accordance with the company real condition.
Oh, okay.
I think she mean there is some fraud like this, fraud, not reflect the real situation. I think like this.
Yeah, maybe the financial reporting is not captured in whole the company. So I think maybe because of the fraud or maybe I don't know.
Because maybe fraud or maybe the accountant it's not professional like this. Maybe the accountant is not professional. Yeah. So in the accounting system, if we have accounting system, must be every single point must be recorded in the accounting system, like pins or this bottle water bottle must be recorded in our system. So the professional accountant must be follow every single point in his company or his business because it must be even assets or liabilities on owner's equity in our system. So in the real life, the professional accountant must be control every single point in his business to reflect the real situation in his business. So in the real life, we have accountant, we have auditor, we have general manager to follow his business.
Okay, so So that's why we have the human as accountants and also internal audits. So they will have to check again before they want to like publish, for example, because the annual report should be published in maybe sometime maybe in the website or maybe. So before that, need to check again. So is it forbidden if the annual report is not capture the whole situation in the company? So this is become it's not a real number. So meaning that. Okay, is it answer that question, Sister Andin?
Yes, sir. Thank you for
Okay.
the answer.
Thank you. So is there any question you want to ask again, everyone from the students? Because our time until 3 Indonesians, yeah. Until 3. And in Palestine, what time, Doctor? Now?
Palestine now, 10.
10. Okay, 10 EM.
Yeah, 10 AM, yeah. Yeah, okay.
Is there any question want to ask again to Dr. Monter, everyone? So is it clear, the explanation, everyone? Is it clear?
I hope Dr. Alamuddin is everything is clear, inshallah.
Inshallah.
Okay. Thank you. I think almost of this audience or participant is from the first semester in Ahmadi University or no?
Yeah, this is the audience is coming from the first semester until the 5th semester, I think. Until the 5th semester. There is because there is I saw that just now Sister Konita, I think that from the 5th semester, Andin also the 5th semester. So I cannot remember the student also from IPEC. Yeah, a lot of students.
Also, I see some students from Palestine.
Aywa. Ada mewujud mana dah di mana? Where is this now? Who is the Palestine?
Hassan Khalifa.
Hassan
Khalifa.
Abdurrahman. Habib Raji.
Yes, sir.
Okay. So, any question? This is Habib Raji from Yemen, Yemen or Persian? Habib.
Yaman.
Yes. Any question want to ask to Dr. Monter? Habib Raji, Abdurrahman? Yakfi.
Yeah, that's enough. Everything was clear actually.
نتكلم باللغة العربية.
نتحدث اللغة العربية نعم.
أيوة.
ما شاء الله. ودكتور علم الدين البحر العلمي كذلك يتكلم لغة عربية. ما شاء الله.
لا قال فقط.
أنا قد زرت إندونيسيا مرات عديدة. I visit Indonesia many times before, maybe more than 10 times. I visited maybe Jakarta, Surabaya,
Bandung,
Aceh, Bandung,
inshallah.
Medan, Aceh.
Okay. Next time you can visit the Jakarta directly, Inshallah. Okay, I think the time is so close with the Discover discussion, Dr. Montir. So is there anyone to add something, Dr. Montir, to our students regarding the accounting?
At the last, I hope, inshallah, every student is understand our lecture. Also, I hope every student, inshallah, will pass from his university and graduate university, inshallah, and will be in the practical issue and in his future, inshallah, and everyone, inshallah, is on his business, inshallah. Okay, thank you so much.
Okay, thank you very much for your presentation and so your time, Dr. Montir, and your kindness to explain to our students regarding the accounting. So inshallah, international program in accounting, we will have also another program, and inshallah we can invite you again to be as speakers and also the general lecture for the next program, and inshallah. And hopefully our meeting and our discussion today accept Allah Subhanahu wa Ta'ala as the ibadah, inshallah. Okay, so after this, so thank you for everyone, to all the students, also the program international to guide us and also to make the program. So hopefully this program is very insightful, especially for students and also for the international program in accounting. So thank you very much for coming, everyone, and thank you, Dr. Montir, and thank you for student, and thank you all the committee. So we can close by the Kafaratul Majlis. Subhanakallah wa bihamdika asyhadu an la ilaha illa anta astaghfiruka wa atubu ilaik. Ila liqa' ma salamah wa assalamu alaikum warahmatullahi wabarakatuh. So return back to the Sister Marini.
Okay, thank you very much for the Professor Dr. Monter Y.S. Eldaia for the attractive material. Hopefully, it can help the audience to have a better understanding of using accounting equation and financial statement. And thanks to Mr. Bahrul Ilmi as the moderator who guided the discussion today more clearly. Now we are turning to the last agenda, which is closing. As the master of ceremony, I do apologize for any mistakes during this event. Finally, I say thank you. Before leaving this event, kindly please everyone turning on your camera because we want to take a picture. Okay, ready? 1, 2, 3. Once more. 1, 2, 3. And once again, 1, 2, 3. Thank you for joining this event and see you on the next event. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Dr. Montir, thank you for everyone. Okay,
Salam for
Waalaikumsalam warahmatullahi wabarakatuh.